you guys on Zoom. If y'all have any questions, Brandy is watching chat, and so you can chat the questions and then she will interrupt me. If you're here for CE, whether you're Zoom or in person, make sure on Zoom, you guys put in the comments that you're here for CE. Brandy does have to make sure you guys are on screen. So identify yourself by just putting your name as it is on your license with Trek, your license number, and your email address, please. Put that in the comment section, and then we'll follow up after this with the handouts from today's call, however you guys have printed handouts here in person. How many of you guys took the time to go further on that worksheet that we talked about last week? How many of you guys left here with the intentions of doing that? Happens all the time, right? What we schedule happens, what we don't. If it does happen, it's by chance. You guys put it on your calendar. I'll give you a few minutes to stick it on your calendar now, just to remind you. One tip and trick I've learned through the years, whatever you put on your calendar is important enough you put it on the calendar. Don't delete that item. Move it if you don't get it done at the time you've scheduled it to be done. Life happens, and I know you guys sometimes have to react rather than be proactive with your calendar and your schedule, especially if you're newer in the business. If you have something on your calendar that you don't get to because something came up, move that item to another date and time that you know you could get it done. But what you guys will eventually learn if you're working with the calendar is when certain times of the day you're more efficient and effective to do different things. I even have there from moon cycle wise, there's even some theory and some science behind better days of the week and better times of the month based on just moon cycle. But whether you're into moon cycles or you're into whatever, just pay attention to your biorhythm yourself and figure out when it's best for you to be sitting down and crunching numbers and thinking futuristically, and when you're better, looking at seeing what's hot on the market right now and being strategic about your day or whoever you're working with. So if you didn't get the handout or you weren't in the class last week and would like the handout that I'm referring to, what we talked about last week is you can be strategic in establishing your business to be exactly what you want it to be based on your personality, what your dreams and desires and goals, and what brings you the most amount of joy. You can put a business together that aligns with all of that and be very strategic with how you do your business. But it's really important too. Yes, Rebecca, I can send, we can send that handout together. Brandy's making notes on what's in the chat. You have to know what your numbers are. You got to know what your budget is. So how much money do you need to make to clear your expenses? What are your expenses going to be? And then how much money do you plan on making that you get to keep for household expenses and travel and just taking, just life. I mean, what do you want your income to be? And then backing into that from a strategic standpoint on average sales price based on what commission you make. And then how many people at the end of the worksheet, you need to know how many people do you need to talk to a week? How many did most of you guys, we decided last week? 5. You have to have 5 prospects a week to hit your average goal. If you had 5 prospects a week, you multiply 5 times 52, actually back it down to 50 because you guys need some vacation time. So 5 times 50 times 20%. That should be the number of transactions that you fund off of 5 warm referrals a week. And then you business plan from there. Where are these referrals coming from? What does that conversation look like? If those are things that you guys are still not real clear about, but you want to get really clear about it, schedule some time on my calendar and we can meet by Zoom, or we can meet in person and get really strategic about that. A lot of times that takes several different appointments because it's a lot of information that you got to think about, because we could put this beautiful dream calendar together, but if it doesn't come from your heart, it's not going to stick. Sometimes that just takes a little time. Today, I wanted to talk about 2 success series ago. We talked about, or I asked everybody in the class, what are a couple of classes that you wish that were included in the success series? And overwhelmingly, people wanted to know more about the actual loan process, what goes on behind the scenes. I am a big fan. Hey, Jen. Be sure to sign in so we know you were here, especially if you are working towards getting your free quarter of MLS dues. And then if you are here for CE, make sure that I know that too. I highly recommend, if you haven't already, in fact, let's just show a show of hands. How many of you guys have ever gone to a title company and watched and learned what goes on behind the scenes to even create a title commitment? Like seeing the abstract plant? No? All right, you guys write that down. Schedule to go. Tape and Title is a great one to go to. Or if we as a class decide we want to go do it as a field trip, we can do that. Listen to me, I sound like a elementary school teacher. Y'all want to take a field trip? You really need to know what goes on behind the scenes at the title company. What are they looking for in order to create that title commitment? Where do they go to look for this information? How do they solve some of the title issues that they have? You got to know that, you guys, as part of your real estate transaction. So when that title commitment comes to you, you got to know what happened behind the scenes to get to a point where you have some issues on your Schedule C that's got to get cleared before you can close the transaction. Same thing with the survey. How many of you guys have ever been to the surveyor's office to see how much research goes on? Anybody on the call ever been to a surveyor's office? No. That's another, their work can't be done until they have the legal work from the title company. But what does that even mean? How do they use that information to create the survey? And then whenever they go out to a property, what are they looking for? How do they find the previous stakes? And then inspectors. You guys need to understand the inspection process. But I think it's also really important for you to understand the personalities behind it all. Because some of the inspectors, I know you guys have experienced it, especially if you've been in the business a long time. Some are more lenient than others. Why is that? There's probably an experience or a story behind why an inspector is extremely particular about these functions of the house versus another inspector that's maybe looking closely at some other areas. Is it experience? Is it experience, or is it experience because of things that have happened in the past? Or is it just fear of liability? So understanding every aspect of the process. But what I want you guys to understand today is the backside on the mortgage process. Does anybody have any questions or want to talk about what they have? Well, how many of you guys have bought a house in the last 2 years? Or done a refinance? Melissa, you have? Let me see who else. I don't see any other faces or any other hands raised. So will you unmute yourself, Melissa, and tell us about that experience? 2 pages.
Hi, can y'all hear me?
Yeah.
Okay. So at the time, I think we bought last year in February or right before COVID came to the States. And I had not done any real estate schooling at the time or anything. So not knowing anything about it, it was very overwhelming and nerve-wracking to know that you have to meet certain things by deadlines. And I'm just so thankful that we had a great real estate agent who is now my broker helping me, helping us through the process, because being a new buyer, it was very scary. I was pretty much petrified the whole time that we weren't going to get in there because of issues that had come up on our buyer's end. So
I love it. And that is just, so if you guys understood the process, I mean, you heard what she said, it was her realtor that helped her stay calm and understand the process. And I can tell you from just experiencing recent transactions in our office, I have a couple of people in our office that just bought houses. Y'all, they do this for a living, and they were still nervous every step of the way. And I could see and I could hear it because I work with them. Which is another thing you got to remember, is that people, whatever they're experiencing in their thinking, they're telling those around them about it. So your knowledge is important. Your understanding of the process is important. You raise your hand. You've gone through this process recently. It's nerve-wracking, isn't it? It's not only nerve-wracking, but it's a lot of interruption in life. I mean, like you're working all day, and then you still have a family to take care of when you get home. But yet you got a lender that's asking for paperwork and telling you got to have it right away because we're at a standstill without it. So you guys as realtors typically have a closer relationship with the client than we do. Y'all have been in and out of houses together. Remember we talked last week, I think we talked last week, about a relationship being a lot more intimate depending on what you're doing at the time that you're sharing energy and space with each other. So you guys are in and out of houses, which represents home, and people are typically comfortable in that environment. So you see and you hear and you feel a lot more with that relationship with your client than what we do a lot of times, because on the financing end of things, people are dealing with us by phone, or they've maybe popped into the office for a short period of time, or everything's been done by email and uploads. So we don't have the same intimate relationship a lot of times that you guys do with the clients. So understanding what's going on, so you're not just agreeing with their frustration, but you're explaining and guiding them is really a big deal. That's part of that relationship that we need you guys to be an advocate for us, because otherwise, however they feel about the transaction itself is a reflection of you guys, even if it's not your fault. Same thing for us. If there's a delay with the survey and it keeps us from closing on time, or there's a delay in us getting an appraisal assigned and it keeps us from closing on time, whether or not it is out of our control, it is a reflection of you and me. And so the more we can explain the process so that people understand, the better the experience, the better they feel about the transaction, the more likely they are to refer us to their friends and family. And at the end of the day, your lender's job is to help you look good and to make sure the transaction closes on time with great communication. So I'm going to go through the process from a lender's point of view, from the way we operate our office. But at the same time, it should be industry standard. I can't promise it is. We are very like I shared with those of you guys that joined us last week, my office, it was right at 7 years ago that really made the shift, kind of following the 7 Habits of Highly Effective People, Dr. Stephen Covey, in establishing processes and systems that allows us to be proactive rather than reactive, for us to put the first things first, and to also be working every one of our transactions with the end in mind. We reverse engineer the transaction with the end in mind, and the end in mind for me is how I want the client to feel at the end of the transaction. Because at the end of the day, that's all that really matters. So, so when I'm sharing this, just know and understand this is the process and systems that we developed 7 years ago that we practice, but most people that you're working with have some type of process and system, even if they have none, right? So I'll explain what our process and systems is so you can see it, and then you guys feel free to ask questions. We are going to stop at the contract part of the whole of the process, and then we'll pick up from there next week. I've got to pull up the slide real quick for those on the call. So hang on one second. Remember, now I got 2 PowerPoints going on too. Does anybody have any questions thus far? Comments? You got a comment, Donnie? I love to hear it.
And some things that one underwriter will approve as group property measurement.
Mm-hmm. Right. Donnie was just talking about the differences in requirements lender to lender, especially whenever you're dealing with land and commercial. Do you understand why there's a difference? So in Donnie's world, where he is doing transactions that are outside of your residential mortgage transactions, the money for those transactions typically comes from either a bank, or it comes from a credit union, or it comes from some of the land, like Lone Star Ag Credit and Ag Preference. So yeah, it's all, the guidelines are not as generic as they are whenever you're doing residential mortgage lending. So, and the reason is because the money is pooled from different sources. So for instance, if I was a bank and I was a board president of the bank, or I was on the board of the bank's deciding what their risk threshold is. And based on the risk threshold, they will determine what the guidelines are whenever they're loaning money. And some of that depends on their liquidity. Some of it depends on their experience. Some of it depends on, I mean, it could be a variety of things. So each one of those entities get to decide what the risk threshold is. When you're doing residential mortgage lending, you have your basic guidelines. The agencies that you're getting the loans from is Fannie Mae, Freddie Mac. That's your conventional loans. And then you have FHA and VA, which is HUD governed. And then you have USDA. And so each one of those agencies has their guidelines. And then on top of that, lenders can add what we call lender overlays or guidelines on top of that. For an example, Guild's okay down to a 540 credit score. There are very, very few lenders that are okay with that. There is not a defined credit score by HUD or FHA. Or I mean, by VA or FHA or HUD. HUD doesn't say this is the minimum. It's a risk threshold that is decided upon. And so we as a lender have been servicing loans for 60 years. We have a pretty good track record with HUD. So HUD is okay giving us some flexibility. And whenever they're looking at track record, they're just looking at foreclosures and late payments. And then we, as a lender, because we have this big portfolio for the last 60 years, we can make a judgment call on whether we're okay with the risk. And our underwriting team and servicing team has looked at our portfolio and said, yes, we're okay, but we're going to require additional down payments. We're also going to require some money in reserves. So that is what is considered a overlay on top of the generic guidelines. Oh my gosh, this was a great chat, and I can't see who wrote that, but we're going to cover that. Renee, that is such a good conversation. So you guys understand that the guidelines are, sometimes they're set guidelines, sometimes they're investor guidelines. It is really important that you know to ask questions. Hey, is this a generic guideline or is this your guideline? Because financing, I mean, at the end of the day, you guys could sell houses all day long, but if someone doesn't have a pocket full of money, you're relying on whoever's giving them the money. And you need to know and be comfortable with what questions you can and should ask. So that is one question. Is the guideline that's keeping them from buying a house, or the guideline that's keeping you from clearing this loan for closing, is that a lender guideline or is that an agency guideline? If you guys, if nothing else, when you're done with these classes, I want you to feel confident and empowered to ask all of the questions that you need to be asking, that you may not feel like you're an expert in that area, but you know enough to be asking those questions. And that's what I expect for you guys by the time you're done with the success series. That's what would make me feel like you guys are successfully completed the success series. Renee asked a question in chat. Why does the lender ask from the buyer the same document several times throughout the process? Great question. And buyers, in her comment, buyers get extremely upset that they have to do this and feel like the lenders are losing their documents, which is a scary feeling too. These are confidential documents. And question why they keep sending them. I'm going to address that just real quick, and then we're going to go into these slides where I can show you where that kind of fits into the process. A lot of times people feel like we're asking them for the document multiple times. And sometimes that is the case. For us, a process and system is not to make the customer's life difficult. It's for us to be streamlined and efficient, also protecting their privacy best we can, utilizing processes and systems. For us, we ask them to upload their document into the secured portal. And the reason we do that is because it's the safest way for us to get the documentation that's highly confidential, and confidentiality is breached often with all of these fishers out there. So if they upload it securely in the system. Now we've just migrated to a system that can read the documents. It has the ability to read dollar signs and translate year-to-date dollar signs into averages and all kind of cool fancy stuff. But oftentimes, and that's the safest way to get paperwork to us besides physically handing it to us. And there's some efficiencies there, but sometimes people email it and we're like, oh my gosh, please quit emailing me documents that aren't secured, but they'll email them. And that is not, then we've got to upload. So Renee, sometimes they email stuff to us or the other lender. And because it's a PDF or a JPEG attachment and it's not secured, sometimes that stuff gets stripped by our system from a security standpoint. And sometimes it ends up in junk filters. So knowing what the lender's process is for getting the paperwork is extremely important, and following the lender's process and not trying to go out there and renegade it. If they asked for the documents to be uploaded, Rocket Mortgage, most of your online lenders are all upload only. Whatever their process and systems is, advise your customers to follow that because that's the most efficient and secure way of getting us the paperwork. Now, sometimes people will upload, for instance, their bank statement, and there's 5 pages to the bank statement. And they send us 4 pages because the 5th page is blank. But the bank statement says page 1 through 5. We have to have 5. And so people will get frustrated because they're like, I already sent that to them and they're asking for it again. We're asking for it because we got to have all pages. So sometimes people feel like we've lost documentation. And if that's the case, we're not communicating clearly that, yes, you uploaded these documents, but it wasn't what we were looking for. Or you uploaded the people will take pictures with their phones and it's not a good clear picture and they'll try to use that as an upload. So we'll ask for documents again, but really it's because what we received won't upload or work correctly. So Renee, when someone says that, I would just say, hey, listen, I know that can be super frustrating. Why don't you ask them if they really didn't receive the documents or what they received is just not adequate? Because if they're asking for the same documents over and over, there's a break in that communication or that system. And so I hope that helps you understand what goes on behind the scenes so you can adequately answer that question. I have, all right, the steps to getting buyer financing. Oh, no. Like, would you, yeah. We're stuck on a screen here, but I'm going to keep talking. So I want you guys to know and understand, a customer calls us, right? For a generic term, we call that a lead, a referral. And whether or not they're ready to move forward now, I'm going to pretend that they're ready to move forward. They're a hot lead for you guys, right? They're ready to go look at houses. We're going to use that scenario right now. I know and understand that that doesn't always happen, but we get an application. An application, is she coming? Oh, she gave you the code. Okay, cool. Yay. An application comes to us, whether or not that is an application taken over the phone. And just so that you guys know and understand licensing laws, only a loan officer can take an application. So if an application comes to us, that's why a lot of times too, you'll see hang on one second. We're having some issues here. No, I am so not TV tech. It is awake here. What? Yay. So your husband works for DPS or worked for DPS and he's retiring? Yay. So what does that mean for you? Are y'all gonna go do some fun stuff, or does that mean you do real estate all the time and he? Yeah. Yeah. Well, yeah. Change is good.
We're all close friends. Nick and Megan got it.
Oh, Austin's my favorite place. That is funny, but she said, yeah. Hey, Megan, will you see if Lindsay or somebody can get that back up? All right, so an application comes in. So an application can be done over the phone by a licensed loan officer. But honestly, for us, a lot of times it is so interesting. Number one, you got to think about this. A lot of people during the day when mortgage companies are open, because a lot of mortgage companies are not 24/7. Heck, even Walmart's not 24/7 anymore. So an application, typically, even if we call the customer during the day, they're at work. Are you guys not seeing the slides? Brandy, do you not see the slides? You do? Okay, cool. During the day, the customer is they're at work or they're around people. So they're not going to give us all of their information. And the pre-qualification is only as good as the information we've received. So for you guys, I need you to understand what questions to ask whenever you are working with a lender and they say we have so-and-so pre-qualified. The definition of pre-qualified versus pre-approved is different for different lenders. There is not an industry standard. However, the actions taken is where there's some commonality. So, I know, isn't that weird? It was showing a while ago. So an application received, credit pulled, review of the income and the employment and the assets based on what the buyer, borrower, referral, lead, whatever you want to call them, applicant has provided. That's a pre-qualified. All right, so a lot of times you'll see a letter with an offer and it says pre-qualified. You guys do not negotiate or write contracts off of a pre-qualification. Don't do it. That's a recipe for disaster. Even if the application was run through the automated approval system. Now, let me explain the underwriting, the automated approval system. So I got in the business in 95. And at that time, everything that was done was just based on an application and a credit report, and you make a loan decision whether or not it fits the guidelines. And back then, thank you. Oh, no. Back then you would look at the debt to income on the front end and say, okay, are they within 28%? On the back end, are they at 41% on an FHA? Sometimes you could go to 43 if you had compensating factors, and we were all, so it was all manual. And then oh yes, Rebecca, I will make that statement again. Don't write contracts off of pre-qualifications. So fast forward, now we have an automated system that determines the risk threshold based on the guidelines for the loan program. Fannie Mae created their desktop underwriter, then Freddie Mac, who always has to copy. They always copy each other within reason. So, I mean, they'll have their own tweaks because they're competing with each other. It became a little more general, and they could determine based on credit history, we're okay with this lower credit score and higher debt to income. So we have some flexibility that we didn't have before. But we have this automated system. You can run an application through the automated system at any point in the process. However, running it too soon without accurate information is a false reading. Okay, and that happens a lot. People are making decisions on loans based on false readings. And that's why I say a pre-qualification letter is not enough to be writing a contract. And it's because people don't know what they don't know. For example, and we'll go over that in the pre-approval slide. There's a class that I'll also be teaching that explains what the difference is in greater detail. But a pre-approval is receipt of income documents, asset documents, where they're getting their money for the down payment, closing costs, taxes, and insurance, covering the appraisal gap, and all of that matters. And it's very specific to the loan amount. There are some loan programs that also require that we prove they have reserves, extra money in their account. Jumbo loans in particular require typically 6 months reserves of the PITI of every property they own, including the house they're purchasing. It's a lot of money. And so having those assets verified matters, and having the assets exact matters when you're running it through the approval systems. The debts have to be reviewed and analyzed closely, because there's some debts, for example, student loans. When we're looking at student loans, a lot of your student loans don't have a payment amount on the credit report. So if we were just to let the robots run application, credit report, automated loan without looking and asking questions, you may not count a payment for a student loan and your debt to income look okay. But when you look further, you realize there's no payment there. And you have to establish what is the student loan payment. Well, are they on income-based repayment? Are they deferred? How long are they deferred? Are they in one of these forgiveness programs? How far along in the forgiveness program are there? Why is not there a payment counted? And we have to count a payment. You guys, we're doing a 30-year loan, a 15-year loan. And even though they may not be paying the student loan now, eventually they're going to have to. Do they have enough household income? And does their cash flow work with that payment? So we have to ask a lot of questions. So the frustrating part for the customer is they're busy at work and their lender is bugging them for information. And now guess what? They got to go pull up or log on to their student loan, each one of the student loan agencies, and retrieve some information for us that is critical for us to determine what is the payment. If we don't take the time to ask those questions and get the documentation, we could throw out a letter to you guys and then find out later we were wrong. And now all of a sudden you got a buyer that's paid for an inspection. They've written a check for option. They've got money on the line with the earnest. And sometimes right now that's a lot of money that you got to squabble over later and hope that you met the deadlines that were put in the contract for getting out of it and getting the earnest money back. And then you have appraisal fees. Y'all, appraisals are expensive right now. We don't have enough appraisers. And so we have the best of the best on our appraisal panels. They will respond and they will do appraisals for us. But I've seen some bills on some of these appraisers because they're hard, come in pretty high. So you don't want to be that one that is part of a transaction that, even though it wasn't your fault, they're mad because they just lost all of this money because not enough questions were asked and the work wasn't done up front. Yeah.
You're showing how somebody's pre-qualified for you guys, and they decide they want to make an offer on it. From pre-qualified to pre-approval, what kind of time frame?
Mike had such a great question. Mike, right? Okay. The time that it takes to get a pre-qualification letter, I won't even write a pre-qualification letter. And let me tell you why. It's too easily confused with the pre-approval letter. They look the same. The difference is the box we check. People aren't looking to see what box was checked. And so they get all excited and write contracts off of a pre-qualification if we're not careful. So for that reason, I won't. And The other reason I won't write a pre-qualification letter, and Brandy may do her business a little bit different, but I don't think so, because we've both been doing this and been burned too many times. If I write a pre-qualification letter, the customer stops right there. They feel like they got what they were looking for and needed and will not get us the paperwork. They want you to go show them houses. So if you guys have referred them to Guild Mortgage and they've completed an application and they don't have a letter yet, it's because we don't have the paperwork we need. Okay. So once people give us the paperwork we need, Mike, we always try to get it done same day receipt. At the very highest, you know, if we had 10 applications in one day, then we'll tell you ahead of time, but the most it's ever is 48 hours. Because please know and understand, just like the student loan scenario, every loan program requires we calculate the payment for that student loan differently. So if you guys are going to go show them, like if someone is in that 250 price range and they're barely barely have enough money to come up with for closing, and we think the FHA is probably the best way for them to go. And you guys, we still want to give them, we'll do a mortgage coach total cost analysis. Don't settle for less than that from your loan officers. Your customers deserve to see options and deserve for us as the lender to counsel them on the options available, the pros and the cons, and help them make a decision. They also need to know what the cost of that money is going to be over time, right? A lot of people think the lowest interest rate is the best way to save money. That is false. It is not about the interest rate. It's the finance strategy that is put together based on their goals and their specific finance needs. So a total cost analysis allows us to explain to them, here's the options, here's the cost to you immediate, here's the cost to you over time. And I'll show you what that looks like. In fact, Brandy, if you'll pull one up, it won't do me any good since I'm on two different computers. I'll pull one up in just a minute. But to answer your question, when we get paperwork, we also are putting all of those finance strategies together based on what options are available, based on the paperwork they've provided and the application and the credit. We're putting that full package together. Because if we don't do that and you guys go show them houses, they're not confident whether or not they can buy that house, whether they want to buy the house. Buying a house is emotional, but they also have to have the money to do it, and they have to feel comfortable with that part of it. So the pre-approval takes a little while, but don't write contracts without a full pre-approval. So your question to the lender is, have you received their income documentation? Have you verified employment? Gaps of employment right now are super important because some people have lost their jobs. Some people have changed careers in the last 12 months. How does that affect their loan? Well, it depends. It depends on what loan program we're using. So, and it depends on what their new income is. Is their income still salary? Was it commission before and it's salary now? Was it salary before and now it's commission? Is there a lot of overtime and bonus now that they're counting on in household income? Well, guess what? Without a 2-year history, I can't count it. I don't know that information if people don't slow down so we can ask questions and get answers. And then the paperwork to back it up. So your question is always, what have you reviewed? And are they okay? Did you provide a couple of loan options for them so they know for sure the best one for them? And then you guys have to know enough about the loan programs and the guidelines to match up the property with the loan type. One of these classes that we're going to do, I don't know why this dang thing keeps coming out. there we go. One of these classes we will talk about, or one of the classes that I offer, it's not part of this series, but I can certainly talk about later, is for you guys to know and understand property conditions based on loans. Because it's really important when you're showing houses. It's really important when you're listing houses. Yeah. Mm-hmm. Mm-hmm.
They scrubbed it, they were going to go private insurance. Then PMC, all the other things, we're not coming over the collection. You have about $10,000 outstanding bill.
Yeah. Here's the thing about medical bills, and you guys hear this on your end all the time, especially right now, you guys, there's a lot of people that are going to get hit with big bills if they haven't already. And medical bills do matter. So people ask that question all the time. Why is my mortgage company saying my credit score is lower than what Credit Karma is showing or whatever credit monitoring service they're using? Credit monitoring is really important. And I don't care what company you use to monitor your credit, because you need to learn behavior and how you're rewarded based on that behavior according to the credit services. So whether or not the credit numbers are the same from lender, like if you were to pull a mortgage credit report versus a car dealership pulling your credit report versus you and going pulling it on Credit Karma, all on the same day with the exact same information, you will have different numbers. Because we all are looking and analyzing the credit differently based on what you're asking to borrow money for. Medical bills do matter to credit scores. It is part of your credit score. So it doesn't matter if it, Donnie, was a $13,000 medical bill or a $13 medical bill, it will affect your scores the same. It's a collection. What I will, and a lot of people are confused about, because they've heard medical collections don't matter. They do. They affect your credit score. Now, when we're analyzing your liabilities, we are not having to factor the medical bill as a liability, like we would if you were doing an FHA loan and you had $20,000 in collections, non-medical. We have to count a 5% payment of all non-medicals towards your debt to income on a pre-approval. If you were doing a conventional loan, we would not. The differences in the two. But the medical bill is still going to affect the credit score the same, whether it was FHA or conventional. What I will tell you about medical bills is, from my experience and just talking to the credit experts, I'm not a credit expert. I've just been doing this for 26 years, so I know how credit affects the loan. And I know enough basics to tell you how to get your score up, but I don't technically know. So I'm not going to pretend I'm an expert. But what I have heard is, in your case with that $13,000 medical, you're better off in making payment arrangements as little as you can get them to accept while you're working on settling the dispute. Rather than let them, like if you, now in your case, if it goes to collections or it has gone to collections, the damage is done. But try to keep it from going into collections by just making an minimum payment. Most places, and I think there's some kind of law or protection around that, and Brandy can correct me if I'm wrong, or I can get the information to you, but as long as you're making a payment and you don't miss a payment, they can't turn it to collection. So even with these gigantic medical bills that some people are going to have from a bazillion different places, because the lab and the x-rays and the techs and this and the anesthesiologists and all of that is going to be a mess. And until the dust settles and insurance is paid, agree to pay the least amount of money they will accept and pay it consistently. So if you guys have anybody that you know that's sick with big doctor bills, that's the advice that we've been given. But those bills could affect people's buying power. So please know and understand that that's going to be happening. All right, so someone gets pre-approved. You guys know what options are available. And you validate, verify, confirm, whatever word you want to use with the lender. I don't care if you're on the buyer side or the seller side, pick up the phone and have a conversation and ask them what all they reviewed to generate that pre-approval letter. Your reputation is on the line. If you can't get a hold of the loan officer at the beginning of the process, when you're trying to verify a pre-approval letter for them to have potentially a new loan, and you can't get anybody to call you back, what's going to happen in the middle of the process when things go bad? And I promise you, I've been doing this for a long time, and I see of about 1,200 transactions go through my office a year. It's not if, it's when in the transaction there's going to be a challenge to overcome. Every transaction has got some kind of mountain or molehill that we all have to communicate and work together to get through. And it's our job as professionals to all communicate well and work it out. And it doesn't matter whose fault it is. It's our job to work it out. What you do affects my reputation, and what I do affects yours. And so we're all together on one team to get it done. You get someone pre-approved and they're out house hunting. As you're looking at different houses, obviously when you narrow it down to a specific house, it is always best, number one, we check and see if it's in a flood zone. You guys have access to that information. You should never hear from a lender that a house is in flood zone. Yeah. Yeah. So where are you going to get it now? Land Link is an app that you guys need. I will tell you, in this area, there are a lot of sellers that don't realize or had forgotten that FEMA had sent them a letter that said the maps have changed and their house is now in a flood zone. They may or not, don't wait and read it on the seller's disclosure, because it might not be there. And your buyer may or may not be interested in the house once they know it's in a flood zone. And flood insurance is extremely expensive in some cases. It is extremely cheap in some cases. I can't tell you, nor you can't tell the buyer how much the flood insurance is going to be. So that is something that might need to be addressed during option period. But if you know that you're in an HOA, or you know that the house that they're narrowing down on is in a flood zone, anything that would affect the cost of the house and be part of the monthly payment, we need to know about. Because we've run their debt to income based on very generic general information. When you narrow it down to a specific house, we need to know where the house is. We want to pull up the property taxes for that specific house. And we want to know anything else, HOA dues or anything else that might affect the cost of the house, and make sure that the loan is still okay. Which is, again, why it's so important that there be a good line of communication with the loan officer that they're working with, because you got to be able to get that information quickly, make sure you're okay, and continue with making an offer on the house before someone else does. The other things that can affect the property is, there was something I was going to say in regards to that. I don't remember. Hopefully it'll come to me. What is the name of the app again, Donnie? Land Link. I'll put that in here. Land link.
And also, go to who owns property.
Good.
And also,
ONX.
now you got get low, even if there's not a fence there.
Okay. So when you're showing land, it's hard to sometimes tell what the boundaries of the land are, but this helps you based on legal descriptions that are recorded.
I can't find it. It's
Land, LAND, LINK. He's going to ask his wife just to be sure, because that's in her lane.
right.
Yeah.
Well, it just talks about having a second telephone in my
Oh.
phone right here.
Yeah, that's all you need, right, Peggy, is another phone.
Right. I got.
So you guys have a pre-approval letter, you're out house hunting. When you narrow it down to a house, then update those figures accordingly so that we can make sure that the pre-approval still stands based on what our assumptions are on the expense of the house. That all matters. The other reason that matters too is because, for instance, in some cases, we have people right now who are buying second homes out at the lake. And they might own in Van Alstyne, and now they're buying at the lake. Well, if they change their mind and decide they want a cute little cottage downtown Denison, but they own in Van Alstyne, we may or may not be okay in that scenario because it's a second home and we're already stretching the guidelines enough to get them approved to buy a second house at the lake with 10% down versus 20% down like you would normally need. So I can't stress the importance of communicating all the time with the lender about what they're looking at purchasing and anything that changes after that initial conversation, so that you guys don't get in a situation where people, you've got problems with the loans later. Donnie will get back to us in just a few minutes with the, okay.
You can do it as a sport or off-road or.
Okay, and then the land link. I'll send this information out to you in the email, recap email of the call. That way you guys have it that way. All right. I can't get that to. All right. Once you guys are under contract, let me explain what goes on in the timeline really quick. Y'all write a contract for 30 days, right? That's just what's stuck in y'all's brain. So whatever today is, y'all just go, okay, we're going to close on October the 15th. We're going to close October the 15th. All right. So you guys know and understand it takes a couple of days to negotiate this contract, right? And then once you negotiate the contract, today's Wednesday. You negotiate the contract and you finally have an executed contract on Friday. It's Friday afternoon. You still got to collect money and get it to the title company and get it receipted. Likely, you're not going to give me a copy of that contract until Monday. And it might be Monday afternoon because Mondays are busy and you guys totally forgot about us. And then you're like, oh crap, I forgot. I got to get the lender a copy of the contract. All right, you guys are now Wednesday, Thursday, Friday, Saturday, Sunday, Monday. 6 days into a 30-day contract, right? Soon as we get the contract, we have 3 days to legally disclose all of the fees that are associated with the transaction, whether there are fees or not. That's what the law requires. So we have 3 days to gather anything you didn't tell us that we should know. For instance, if the house is on septic and you guys didn't do the on-site sewer addendum, and the house is on septic and we find out later, guess who has to pay for any of the expenses associated with the septic? Me. So we're gathering all of the information that we have to have that affect the cost of this transaction as quickly as we can. It requires partnership. It requires great communication between the team. I'm giving you guys the money. Please help a sister out in giving us all the information that we need so that we can disclose the loan as quickly as possible. In our office, we try to get it disclosed within 30 days. I mean, within that same day. Because guess who's super busy working and taking care of kids and the household? And now they got the house to sell and they got to get it all packed up. And you told them they had to do XYZ to have it ready to sell. They're very busy. And now I've got loan disclosures. We're 6 days into a transaction. If I get those loan disclosures to them on Tuesday, after I've worked super fast to get all the information that I need to disclose, so I disclose it on Tuesday. Now I tell them, hey, you got to drop everything you're doing and sign these by midnight tonight on Tuesday. What if they don't get, what if one spouse gets it done, the other one fell asleep on the couch, and it's Wednesday now? We're 7 days into a 30-day contract. It has taken 2 weeks, 3 weeks to get appraisals back. So I can't stress the importance of you guys communicating and giving enough time in these contracts for everybody to do their job and do it well. My recommendation, and I get so much pushback, write your contracts for 40 days, assuming it's going to take a couple of days to negotiate. Assuming it's going to take us, you got a weekend in there. Assuming that we are going to need a day or two to get the loan disclosures sent and signed and returned. Assume that, because people are busy. People are getting sick. People are having to take care of loved ones that are sick. And the last thing you want to do is require that they be pushed on and shoved into making decisions faster than they're comfortable to making, only because you have it stuck in your brain 30 days. Now, I know you might get some pushback from sellers who are saying, well, I got cash offers and they can close in 2 weeks. My question is, do you really want to do that to the seller? Y'all, how long has it been since you've sold your house? How long has it been since you've moved? It's a lot of freaking work. So just because they can close in 15 days doesn't mean that that's a good idea for your seller. Maybe your seller needs time too. And at the end of the day, the more we rush, the more we demand, the harder we make it on people, the more negative their feelings are going to be about the transaction. And it reflects on us. And every one of us here want a referral-based business. I don't want to spend several thousands of dollars buying leads every month. I want to work with people that already know, like, and trust me and really thought I did a great job and refer their friends and family. And it's all of that happens based on feelings on how the transaction went when they used you. They're not going to remember what it was that you did or what you said. It's how you made them feel during that transaction that matters. So just knowing and understanding, number one, pre-qualification letters. Don't write contracts on pre-qualification letters. If you don't know the difference between a pre-qualification letter and a pre-approval, I'm going to tell you right now, my definition, so we're just going to pretend that's everybody's definition now. A pre-approval is validation and verification of the information on the credit report and on the application provided in writing by third parties. And then it has to get ran through the automated approval systems, because as good as I am and as good as Brandy is, sometimes we're wrong and we get totally shocked at the results that we receive on an automated loan approval. And we have to play with it. We have to make it work and get back to the customer and let them know what they got to do in order for it to work. So know the difference, ask the questions, and you guys insist that the loan officer that your buyers are working with, whether you're on the buyer side or the seller side, if there is not an open line of communication, suggest that there is a better and easier way of doing business where you actually can get a hold of somebody and ask questions and work through challenges as they come up. Because it's not if, it's when in a transaction that there might be a mountain or a molehill that you got to work through. As little as it may be, as little as it is, can't get a hold of the insurance agent to get a binder. Next week, we'll talk about the importance, and we'll even go into greater detail when we talk about title commitments. I, at the very beginning of the call, said I highly encourage you guys to know and understand every step of the process and what goes on. We'll cover title commitments, knowing and understanding what you're reading and what you can do about it, what you can and can't control on those title commitments. And then we're going to talk about surveys. What Donnie said is absolutely correct. Some lenders require a new survey, some don't. Why is that? We'll talk about it. And then I also have a series where we're talking about the appraisal process. You guys need to know and understand what goes on behind the scenes from the appraiser's point of view, what you can do to help. And if the values don't come in, what do you do about it? And those are conversations that we even need to have with the buyers up front, because it's possible the house won't appraise for what they have agreed to pay. And if that's the case, what do they do about it? But I also want you guys to know and understand what goes on behind the scenes once an appraisal is turned in to the lender, because I've gotten a ton of phone calls where the appraisals come back. It's 2 days before closing, and now the lender is asking for a second appraisal. Why does that happen? We'll talk about it on that appraisal series. And in between, y'all need us, let us know. Thank y'all for joining by Zoom. And thank y'all for being here in person. If you have not already signed the CE roster, even if you don't want CE, sign it. But put a star or something so I know you do want CE. Those of you guys on Zoom are taken care of.
Thank you.
You're very welcome. I've got a shameless plug. I'm fixing to go to the gym, not because I love working out, but because it's good for my health. And I highly encourage you guys to go do some walking or some kind of physical activity today on this beautiful day. Go walk some land, Donnie. No. Oh, good. I know. I tried jumping rope the other day, and it's not as easy as it was when I was a kid. Hula hooping, I tried that once too, and it went to my ankles. Donnie, be sure to send me when Darla responds with the land link, so I can get that to everybody.
Hey, Michelle. Quick question. Is anyone supposed to be filling out the evaluation sheet on Zoom?
Yeah, I was thinking about that, Brandy. I didn't see it in my packet that I printed out today. So we need to send BJ an email to get that to go out with the summary as well. So for those of you guys that are doing this for CE, TREC does require that we have the survey form with the roster. So we'll get the survey form out to you guys. We do need you to fill it out and get it back to us to keep me in compliance, please. So tell others in your office, the more the merrier. And I'm telling you, this information is not typically disseminated any other way. And it's good stuff. I mean, everybody needs to know the lending side of the process as well as every other aspect of the business. All right.
Thank you, Michelle.
You're welcome. Does anybody else have any questions? No. All right, you guys, I read a statistic the other day that you are 60% more creative when you're walking. So if y'all have any problems you haven't been able to figure out how to solve, or you need to work on a marketing strategy or whatever, go walk. And it'll all come to you.
Good idea. I do walk.
Walking, there was something else. I can't remember what the statistic was, but basically, I mean, it's just the oxygenation in your body just from movement itself. 15 minutes a day, and it doesn't even have to be rigorous. It's just the increase in the heart rate and the blood flow. I think it was like 15% reduction in doctor's visits for people that are active, just 15 minutes a day versus people who are not. So there you go. We all need to stay healthier right now. So
Well, I do it for my dog, so then I do it for myself.
that's right. Whatever your reason is.
Right.
But y'all have a great
Thank
day.
you. Thanks.
You are very welcome. Bye-bye. Okay. I was reading through the notes. I'll keep that up.
So I have a transaction right now that we're supposed to close Friday and then still don't have the appraisal and can't even get in contact with the appraiser. Do you have any advice?
What type of, where's the property? So, my question is always like, what are you even supposed to put on the extension?
Yeah, exactly. That's what, in talking to the lender, she's just like, well, we're just at a crossroads right now. We just have to wait until we know something. Like, we've been trying to call him for 2 weeks and we haven't heard from him. So what are we going to do 2 weeks from now if we still haven't heard?
Exactly.
And these people are going to be homeless because they're closing on their house in South Texas and they won't have anywhere to go.
If they don't have the appraisal even accepted, I would say you're 30 days away. So do you terminate and go and I mean, is the seller okay extending 30 days? Does your buyer want to try another lender if you got to wait that long? Or do you, or do you wait it out? But if you don't have an appraisal accepted yet, you got to plan on 30 days.
Well, you mean accepted by an appraiser to do it. The work was supposedly done on the 2nd, and we were supposed to have the appraisal
good.
on the 9th,
Okay,
but we just haven't got it back from the appraiser. yet.
okay, good. So you're not as far
Okay.
back. Yeah, if the
Okay.
appraiser hadn't been assigned yet, yeah, you can pretty much plan on 30 days.
Yeah,
Um,
they've done